Hello, this is Business Now, reaching you live from IBrandTV News Studios in Lagos, Nigeria. Coming up, Central Bank of Nigeria says it will sell 1.2 trillion naira worth of treasury bills in the third quarter of 2022. Despite CBN restrictions, Nigerians trade at least $185 million worth of Bitcoin. Kenya foreign direct investment declines by 31.5 billion shillings. Refineries cash in, making nearly 5 times as much money from refining petrol. Hello again. Thanks for joining us. I'm Michael Nath. Now, Central Bank of Nigeria says it will sell 1.2 trillion worth of treasury bills in the third quarter of 2022. The Apex Bank disclosed this in its Nigeria Treasury Bills Issue Program for third quarter of 2022. TBS are short-term debt instruments used by CBN to borrow money from the public on behalf of the federal government. The Apex Bank also uses TBS to control money supply in the economy. Revenue made by the Nigerian National Petroleum Corporation from crude oil sales in 1 year has been put at 1.7 trillion naira. The corporation's latest monthly and financial report for August said the sum was earned from March 2022 to March 2021 after it lifted a total of 108 million barrels of crude oil within the year at an average price of $43 per barrel. The crude, Nnpc said, was lifted from the daily allocation for domestic utilization, translating to an average volume of 243,650 barrels of oil per day in terms of performance. Price fluctuations within the period ranged from $25 per barrel in March 2020 to $17 per barrel in April, 25 barrels per barrel in May, $40 per barrel in June, $44 per barrel in July, $55 per barrel in August, $40 dollars per barrel in September, $40 per barrel in October, $43 per barrel in November, and $51 per barrel in December 2020. In January 2021, crude lifted was sold at $57 per barrel, $64 per barrel in February, and $64 per barrel in March 2021. In order to meet domestic product supply requirements, Nnpc said all the barrels were processed under the Direct Sales Direct Purchase scheme, while no deliveries were made to the domestic refineries for processing. The country's official exchange rate during the period was around 400 naira to the dollar. Nigerians traded at least 77.75 billion naira, that is $185 million worth of Bitcoin in the first 3 months of the year, despite the Central Bank of Nigeria's restrictions on cryptocurrency transactions in the country. This 5.71% increase from the 73.54 billion naira worth of Bitcoin that was traded in the corresponding period of 2021, according to data made available to our correspondent by Paxful, one of the major peer-to-peer cryptocurrency platforms in the nation. Trade from Nigeria accounted for 25.87% of the total 300.48 billion naira worth of Bitcoin that was traded on the platform in the quarter under review. Global trade on the platform showed an 8.33% increase from the 277.377 billion naira that was traded on it in the corresponding period of 2021. An analyst has highlighted the reasons behind the high engagement of Nigerians in cryptocurrency transactions, despite the regulation placed on the platform by the Central Bank of Nigeria. Cryptocurrency expert Tola Fadugbawe analyzed this on the backdrop of a report that Nigerians traded at least 77.75 billion naira worth of Bitcoin in the first 3 months of the year, despite the Central Bank of Nigeria's restrictions on cryptocurrency transactions in the country. Fabwe said Niger this on IBrandTV's Business Breakfast show.
All those data being captured are only captured because users or holders decided to trade on those platforms. Now, we can't even capture the ones that are traded without a third-party platform, that are traded one-on-one, which is called the real peer-to-peer, not someone standing as an escrow and can capture data. So the figures are way more than what we have right now. And in reality, we can't capture the exact figures when it comes to transaction, which is very interesting to show you that people are interested. And also, in the real sense, government cannot ban cryptocurrency. What government can do, they can stop their citizens from interacting with cryptocurrencies, and they've done that. We saw what happened last year, February, when the central bank passed an instruction to all banks to stop bank users or their customers from using debit cards to deposit on cryptocurrency platforms, either to buy cryptocurrency or stop them from accepting liquidity from cryptocurrency transaction into their bank account. They've successfully done that, no doubt, and that is the farthest they can go. Except they want to, even push way further to start maybe arresting people, but that doesn't mean that they can stop.
The Inspector General of Police, Usman Al-Khalibaba, has ordered tactical and intelligence commanders of the force to deploy assets towards tackling perpetrators of economic crimes aimed at sabotaging Nigeria's revenue-generating value chains, including crude oil vandalism. This was disclosed in a statement issued by the police on Thursday evening after unveiling the newly appointed Assistant Commissioner of Police in charge of the IGP Special Task Force on Petroleum and Illegal Bunkering, ACP Lot Lanta Garba. Now, the IGP also warned all economic saboteurs to cease their unwholesome activities, as some Nigerian oil industry stakeholders had earlier raised alarm about the quantum theft of oil in this sector. The gap between the savings and lending rates in the banking sector widened by 25.33% in March, according to figures obtained from the Central Bank of Nigeria. Latest figures obtained from the CBN on money market indicators revealed that the savings deposit rate was 1.28% in March, while the maximum lending rate was 26.61%. It showed that in February, the savings rate was 1.28%, while the lending rate was 26.61%. According to the figures, the savings rate stood at 1.25% in January, while lending rate was 30.73%. Experts have, however, said that the rates introduced in the market by the banking regulator would discourage people from saving and encourage those with their funds to look for other investments that would yield better returns. The Semi-Customs Command of the Nigeria Customs Service yesterday said it intercepted and seized 10,865 jerry cans of premium motor spirit PMS of 30 liters each, equivalent to 325,950 liters, worth about 10 tanker loads of 33,000 each, with a duty paid value of 65,614 million naira along the various creeks around Badagry and semi-border area of the country. The command also seized 139 cartons of soft drinks, 100 cartons of Gabado tramadol, 120 milligrams, 2.8 kilograms, and 306 parcels of cannabis sativa, and 132 packets of tramadol capsules, even as 2 suspected smugglers were arrested for various crimes. Showcasing the seizures, the customs area controller of the command, Controller Bello Mohammed Jibo, said a continuous surveillance of the beaches and creeks by the men of the camp command, yet recorded another huge interception of 1,216 jerry cans of petroleum products of 30 liters each. Hope rose on Thursday for about 2.9 billion people across the world that are currently without access to internet connectivity, as governments and firms pledged over $18.5 billion to support global access. This was the high point of the International Telecommunications Union World Telecommunications Development Conference conducted in Kigali, Rwanda. The fund was facilitated at the Partner Connect Digital Development Roundtable session, where over 360 pledges representing an estimated combined financial value of $18.55 billion was sealed. And ITU, the communications arm of the United Nations, explained that the pledges were largely unprecedented support from governments and companies to expand internet access everywhere as a key aspect of sustainable development. Statistics from the Nigerian Communications Commission show that there are still 114 access gaps, with some 25 million Nigerians still without access to basic telephony services. Nigeria, as a strategic member of the ITU, is expected to benefit from the $18.5 billion pledge for improved global connectivity. Now, still to come, world stocks hit 2-week lows on inflation jitters. Details of this and more after this break. Stay with us. You're watching Business Now on IBrandTV Lagos. Now to Africa scene. Kenya's foreign direct investment inflows went against the regional recovery trend in 2021 after falling $269 million, a United Nations survey showed on Thursday. The UN Conference on Trade and Development's World Investment Report 2022 estimates that the FDIs amounted to $448 million, using a conversion rate of 117 shillings per dollar from $717 million in 2020. Now, the 37.52% dip in foreign investment deals went against a recovery witnessed in major countries in Eastern Africa, where average FDIs jumped 35% to $8.2 billion. UNCTAD says FDIs in Kenya were partly driven by project finance deals around 4 bridge projects aimed at bringing connectivity with remote areas. Now to foreign scene. Oil refineries are making nearly 5 times as much money from refining petrol as they did a year ago, data show. A lack of capacity to refine petrol and diesel from crude oil has helped to push fuel prices to record high levels and increased profits for refinery owners. Petrol prices are at an all-time high, though the oil price remains well below record levels. The loss of Russian supplies has stretched an industry which was already at full capacity. Tuesday saw the fastest rise in petrol prices for 17 years, and the cost of filling a typical family car has now passed £100 for the first time, paling costs on motorists. On Thursday, the price of both petrol and diesel rose by nearly a penny a litre, the RAC said, with petrol at 183.16 pence a litre and diesel at 188.82 pence. Now, Spanish national consumer prices rose 8.7% year-on-year in May, up from 8.3% in April, with core inflation hitting its highest since 1995, official data showed on Friday. The National Statistics Institute data confirmed a preliminary report late last month. It showed fuel prices had increased 15% year-on-year, with prices of food and non-alcoholic beverages such as fruits, bread and meat at their highest in Spain in 28 years, with an annual increase of 11%. Core inflation, which strips out volatile food and energy prices, was at its highest since 1995 at 4.9% year-on-year, up from 4.4% in April, the National Statistics Institute data showed. Easing energy prices had brought the Spanish inflation rate lower to 8.3% in April after it hit a 40-year high of 9.8% in March, but prices resumed escalating in May. World stocks hit a two-week low on Friday as rate hike guidance from the European Central Bank and jitters over upcoming U.S. inflation data stoked concerns about global growth, while verbal intervention from Japan boosted the yen. The ECB said on Thursday it would deliver its first interest rate rise since 2011 next month, followed by a potentially larger move in September. Analysts at Deutsche and Morgan Stanley lifted their Eurozone rate hike forecast on Friday. Investors expect the Federal Reserve to raise interest rates by 50% or 50 basis points next week, especially if U.S. consumer price data on Friday confirms elevated inflation. The consensus forecast sees a year-over-year inflation rate for May of 8.3%, unchanged from April. We'll go on a commercial break and we'll return with more stories, at this time with Omobolanle. Stay with us.